Welcome back. You're watching The Money Show on ET now. Well, as we're talking about diversification, we can't miss out on the importance of the role that assets like gold play in our portfolio. But having said that, of course, gold seems to have lost quite a bit of its sheen. Just last year, we saw its best gain in a decade. But since 2021, it is now seeing the worst start to the year all the way since 1991. So what's taking the sheen off from everyone's favorite asset class? Jayesh Khilani is here to explain the rise and fall of gold.
The yellow metal has gone from being a leader to a laggard. Remember that it had gained 25% in 2020 and posted the best year in a decade. However, that has changed in 2021 with the yellow metal declining as much as 7% and posting the worst start to a year since 1991. Also remember that it has declined 15% from its 52-week high and currently trades at a 7-month low. It has also managed to decline 5 out of the last 6 months. That's the kind of underperformance we are referring to when it comes to gold prices, and the fact that it has been the worst performing commodity since the start of the year 2021. So let's have a look at what were the factors at play while we were in 2020. Of course, it was the pandemic driven year during which there was a lot of demand for the safe haven because of the pandemic, as well as the low interest rates and the stimulus spending that we had in 2020. But what's changed in 2021? The US 10-year yield for starters has risen about 38 basis points since the start of the year. The dollar index has firmed up about 1.6% since the Jan low that we've had. And the fact that there is an economic recovery that is underway, at least all the indicators are pointing towards that as well. Technically, it had also formed a bearish death cross pattern that we had highlighted a few days back. So these are the factors that are contributing to the fall of gold in the current year.
Well, those are the numbers before you. Thanks, Jayesh, for that. Interestingly, let's take the 4 commodities and compare the kind of returns they've given in the last 5 years on a CAGR basis. That's annual basis on an average. Gold, 9%. Not bad. Still better than your average 1-year FD. Silver, even better, 11%. Oil, negative 2%. So that's really been one of the more, disappointing asset classes. But Bitcoin has smashed all records in the history of financial markets. In the last 5 years, the Bitcoin has given an average 122% CAGR. That essentially means that it has managed to double your money every single year. But remember, this is an asset class that's extremely volatile. Let's not forget, also subject to a lot of regulatory overhangs. So keep that in mind. Well, moving on, the RBI has issued a set of detailed guidelines for improving security, control and compliance for banks, gateways, wallet operators and other non-bank entities as well that are running payment operations in India. The norms will also be applicable to your scheduled commercial banks, even small finance banks like Ujjivan, Equitas, etc., payment banks, even credit card issuing NBFCs. These rules will have implications not only for these banks but also for all the third-party payment apps which all of us usually use, like Google Pay, Phone Pay, WhatsApp Pay, etc. And these directions will come into effect in the next 6 months. I think the important part of here is the aim is for cyber security, for protection of source code and for privacy and integrity of consumer data. So it's a good step, especially for consumers like you and me who use digital payments. And with that, we'll take a very short break on the show. But when we return, we'll be back with our Spend with TMS segment. Sunil Suresh, Group CMO of MakeMyTrip.com, will be joining us. So much to talk about. Could we be seeing fresh curbs? How will that impact our future travel plans? And has it become too early now to plan for the summer? We'll be back to answer all of these questions.